Living in Idaho or thinking about moving to Idaho from, say, California? Let's see how Idaho taxes retirees, my friends. Welcome to another edition of the Heritage Wealth Planning YouTube channel, my Heritage Wealth Planning t-shirt. You can get one if you like. So we're going to talk today about the state of Idaho, a potato state. I'm not sure what Idaho is called. Being from Maine, we like to say Maine potatoes, but I think Idaho is a potatoes-loving state as well. So let's see what we got. I have no clue what Idaho does from a tax perspective, so it'll be fun to find out. As we do, we start with Kiplingers. Idaho's got white, which means they are mixed, so not least tax-friendly, not most tax-friendly, smack dab in the middle. And let's click on Kiplingers and see what they say about the great state of Idaho. All right, so mixed tax picture. The Gem State, who knew? I did not know what that was. Idaho's name was. Taxes all income except Social Security and railroad benefits. Wow. Its top tax rate is 7.4, and it applies to taxable income of $21,810 and above for joint filers. So just, again, as I said before, this might be your only video you've watched on Heritage Wealth Planning for this section in terms of how states tax retirees. I got to always elaborate the difference between taxable income and gross income. And here's my trusted calculator. $21,810 is taxable income. Now, if you're married filing jointly under the new Trump tax law and you're over the age of 65, you get $26,600 of exemptions. Standard deductions, excuse me. So you add 20, that means you need to have income of over $48,000 before you're going to be taxed in Idaho, because your first $26,600 is free to clear of any state tax, and then your next $21,809 is free and clear of any state tax as well. So you need roughly $50,000 of gross income before you're taxed in the great state of Idaho. All right, and then you hit a tax rate of 7.4%. Well, I should say your top tax rate. So let me back up there. Your top tax rate is 7.4%. So that's before you hit roughly $50,000 of gross income. You're going to be paying a 7.4% top tax rate. There's generous retirement benefits deductions, but only for those with qualifying public pensions. I never understood why public pensions get such a fair deal and private pensions do not. Idaho does not have, well, I know why. It's because the lobbying groups of public pensioners, that's for sure, pensioners. Idaho does not have an inheritance tax or an estate tax. Sales tax, 6%. Localities, typically resort communities, can add as much as 3%, but the effect of the state average is negligible. There's a typo there. Kiplingers, if you're reading this, negligible is 6.03. So basically, the average effective state sales tax is just a tiny fraction above the state tax levy. Food is taxable, but the state attempts to offset the levy with a $100 per person tax credit, and seniors get $120. Why not just not tax food? All right. Effective income rate is income tax rate 6.4 for individuals and 6.7 for joint. That's not cheap. Social Security benefits not taxed. Idaho doesn't tax retirement benefits from railroads, but offers retirement benefits deductions if you're age 65 or older and receive qualifying retirement benefits such as a civil service or military pension. The amount deducted must be reduced by Social Security retirement benefits. The maximum amount for 2016 that could be deducted by married couples filing jointly was $47,000, and for married filing jointly, and singles $31,000. So let me just explain what that says. If you have a military pension of $47,000, you could deduct the entirety of it. If you have a military pension of $60,000, you could deduct the first $47,000 from your income tax in Idaho. And let me give you a better example. If you're from California, a retired teacher, for say, and you have a pension of $110,000, the first $47,000 is deductible. The rest is going to be taxable as ordinary income in the state of Idaho. All right, now your Social Security won't be taxable, so keep that in mind. And we'll go over an example of this here in a second. IRAs, taxes, ordinary income tax rates, 401ks, pension, defined contribution, private pensions, all taxes, ordinary income rates. And we talked about civil service pensions. Government pensions get a pretty significant deduction, $47,000 if you're a married couple filing jointly over the age of 65, and if you're single, age 65, it's $31,000 It does, but you have to be over the age of 65. So if you're a firefighter in Los Angeles, retiring to Idaho, and you're only 53, you're going to pay taxes on the full entirety of your pension until you hit the age of 65. Median property tax, and so this is pretty good. The median home value in Idaho is $165, and this median property tax is $1,200. So we take our trusty calculator, we divide 1243 into 165, and our property tax is less, about 3/4%. So not too shabby. It's pretty low. If you're a qualified Idaho homeowner, you may be eligible for property tax relief. To qualify, you must own and occupy the home as your primary residence, meet income requirements, and be 65 years of older, or a widow or widower, or a bunch of different qualifications here. The program may reduce property taxes on your home and up to 1 acre of land by as much as $1,300. So basically, if you qualify, essentially being the age of 65 and older, you won't pay any tax on the median home value. Let's just keep that. So if you have the median home value of 165 and you're over the age of 65, you're not going to have any property taxes, which is pretty nice to know for sure. Also, the property tax deferral program that allows eligible applicants to temporarily defer property taxes on their home and up to 1 acre. They must live in their primary residence or mobile home and have lived there since before 2016. They must meet one of 7 requirements. I'm not going to get into that because, again, you're just deferring it. Sales tax is due on vehicle taxes, and there is no inheritance or estate tax. Kiplinger does not tell us what the sales tax is on vehicle taxes. So as we would want to do, let's go to the Tax Foundation and click down here for the great state of Idaho. Wow, we're getting knee deep in this learning tutorial here. All right, so individual income tax, the top individual tax rate in the state is 7.4. When you add local taxes to it, it's 9.3% is the burden, which is smack dab in the middle of the U.S. Tax Freedom Day is April 15th. All right, that's good. That's good. So in terms of income tax, it's definitely not superior. That's for sure. It's right in the middle, which is why they're saying it's neither tax friendly nor tax not friendly. It's right in the middle, and there you go. Sales tax, a big one, 6% in the state, and the overall rent. So look at this. So I want to point this out. Top 20 for the state, 6%. So if you're just looking at the state, you're saying to yourself, ooh, that's bad. It ranks the top 20. Because remember, the top 20 is bad. We're not wanting to be in the top 20. But when you factor in the localities as well, the average is 6.03, which means it's in the bottom third of the state of the country for sales tax. So that's very, very good to know. So from a complete combined state and local, you're only at 6.03, which is in the bottom third for the state of Idaho. So you got to differentiate between state and local and state sales tax. I have a feeling a lot of people do not. Looks like if you smoke, they don't hammer you there. And they do tax it pretty good on gas tax for sure, the top 20, which is not what we want to see. But you can smoke and you don't get killed, and you can drive and you're not going to get killed, but you're certainly going to pay a significant high tax relative to the rest of the country. Talk about property taxes. Yeah, so they're the bottom third for sure, 0.75, and $964 is the average, or per capita? Yeah, so the average, again, per capita in medium, different things, but we're just going to use that essentially like the median, which is what we're using before, about $1,200 on the median property of roughly $175,000. So very favorable from a property tax, very favorable from a state tax, and middling in the income tax. So 2 out of 3 ain't bad, and then even the income tax is still middling. And I like that best because, as I said many times before, we can always manipulate your income in terms of taxes that you pay on it. We cannot manipulate sales or property taxes for sure. So this, of the 3 things, property sales and income tax, I'd much rather be like Idaho, higher income tax and lower property and lower sales tax for sure. All right, so let's go over here to SmartAsset and look at Idaho. They're saying it's tax friendly, not very tax friendly, but tax friendly. So let's check it out. And what we do in the SmartAsset.com is we actually run some numbers here. So we're going to say $25,000 of Social Security and $25,000 of IRA distributions, married, filing jointly, and born in 1953. And so we got $50,000 of total. I'll make sure we got rid of our pension right there. Let's get rid of that. So we got $50,000 total of income in the great state of Idaho, and you pay $84 in income tax to the state on $50,000 of income because you're over the age of 65. So remember, the only amount you're paying is above and beyond the 7.4% is above and beyond roughly the $47,000 of income that you have, a gross income, because you get the deduction. So here you essentially got $3,000 at 7.4% times 7.4%, and there you go. So you're basically saying to yourself, I have $50,000, roughly the first $47,000 is free and clear of the state tax. The rest will be subject to up to 7.4%, and there's your $84 in state income tax. So not too shabby. And again, if you just look at the tax rate, you might be dissuaded to move to Idaho. You might be like, oh, the taxes are too high. Well, lo and behold, it's simply not true. Not when you factor in the deductions. Let's throw a public pension there. $25,000. So now we're going to have $25,000 from your government pension, be a military, firefighter, whatever, $25,000 from IRA distributions, and $25,000 Social Security. What's the taxes due there? All right, so there we've increased our taxes to $442 because now we're well above that $47,000 threshold, even though this is not taxed and this is not taxed. That still put us above the amount where this will be taxed. And what we can do, in fact, we can say, let's do this. We'll say $40,000 Social Security and $40,000 of public pension. And I bet that's not going to be subject to tax. Let's see. Oh, I get it, because remember, the first $47,000 is free and clear of taxes, but that's okay. I'm not a big fan of this calculator necessarily. My intuition is that they're saying your Social Security plus your public pension gives you $80,000 of gross income. We don't tax any Social Security, but we are going to tax anything above the $47,000 of your public pension. So basically above the $23,000 or so at that 7.4% rate or whatever it is, up to 7.4. Yeah, I don't know if that's true, actually. The reason I say it is because they said your pensions are not subject to taxes once you're over the age of 65. Actually, maybe that's it. Maybe they're not quite 65. Let's do this. Okay, yeah. So that's definitely not true here. Bear with me just a second, my amigos. All right, so they're basically saying you have $80,000 of gross income. We're not going to tax Social Security. We're going to give you up to $47,000 that you can write off that total gross income for your public pension, which means only $7,000 roughly will be tax exempt. The rest will be subject to taxation. I don't think that's correct. I don't think that's so. Let's. I'm just curious. Let's do this. Let's say you have nothing but public pension. Let's see what we got here now. Yeah, so they'll still tax you. I don't know that to be true. All right, just bear with me just a second, my friends. All right, so there you go, $47,000 of public pension, nothing taxed. $50,000 of public pension, still nothing taxed. Interesting. But yet, if you had $80,000 of public pension, they're showing up as taxable. Yeah, I don't get that. All right. At the end of the day, I think the SmartAsset is probably a little bit overshooting your taxes. But look, I don't live in Idaho. I'm not a CPA there. Certainly be something you want to investigate. Either way, at the end of the day, if you have $25,000 of Social Security, $25,000 of IRA distributions, and we'll just say $25,000 from your fireman's pension, you're paying all of $442 in taxes on $75,000 of income. That ain't too shabby. So that's not too shabby at all. Well, that's your tutorial on Idaho. Always thumbs up, comments down below. Definitely, if you're familiar with Idaho taxes, maybe you're thinking about moving there from California. It seems to be a lot of people move from California to Idaho. I'd love to hear your thoughts, comments, anything you'd like to add to that. I think it'd be very interesting, actually. So put them down below. Put them in the comment section. Don't forget to subscribe right there, that little button that says subscribe down there. And, of course, as always, hit the notification little bell to be notified of future content. See you next time on the Heritage Wealth Planning YouTube channel. And as always, go to the heritagewealthplanning.com, heritagewealthplanning.com for all the blog posts, YouTube videos, and podcasts that we do. See you next time. Thanks, guys.